Okay, guys, here's an interesting one for you. How to catch explosive gold moves. Okay. So gold moves in two phases, right? Accumulation phase and breakout phase. That's the way I see it. It moves impulsively, it moves quick. It's very hard to catch it when it moves like it did yesterday, and the majority of the times over the last couple of weeks, you know, it it when it goes, it goes, okay, and you can hit your take profits in a matter of minutes. It doesn't take very long. I mean, this move here with 800 pips, 867 pips. Okay, that's 2 hours. I've just set this to 2 hours to give an example of how how you can actually trade gold, and there's actually not as much risk as you think. Okay, because it moves quick. People are scared of it, but it makes quick profits, and it's a lot of time waiting for the accumulation to occur. But I would study this, and I love trading gold, right? I say I have a love-hate relationship with it because when it starts doing this, it gets on my nerves, and I have to put it to one side and go back to forex pairs for a little while. But yeah, there's great profitability involved with trading gold. One of my oldest and best students when it comes to trading gold is Ross. Got a very good relationship with gold. He makes a lot of money, and yeah, he's achieving good things. So what I want to draw your attention to here, okay, is a couple of things, right? And these are 4-hour zones, okay? So once prices come down, it's accumulated, it's broke back up. It's found a support here, and then it's accumulated, moved down, and it's kind of a long-winded accumulation before we had this spike out on Tuesday, and then we've not closed above here, which 2038 area, okay. And gold will react to key levels probably better than any forex pair will, okay, because people have in their mind that oh my god, right, gold's hit 2045, gold's hit 2060, I'm gonna sell my gold. When it comes down lower, people want to get involved because do you know what? Gold's the oldest currency in the world and the most valuable, okay? There's limited supply of gold, and yeah, people want to get their hands on it because it doesn't depreciate in value like anything else. So how do we catch this move here? Okay, well, one thing I like to do, obviously, is when we've got an area like this, we need to wait for a breakout, okay? You'll find these breakouts pretty much every day because price will move from price to price to price to price. It will, move from here to the low, and then it will move back up. But you see there's a lot of spikes. We want to be in and out inside these spikes. We don't want to be holding on to gold too long like I did a couple of weeks ago, because you either get burnt or you end up with less profits. So let's just move down to the 1 hour time frame. Okay. Now, what you're going to see here, okay, is hang on a sec. Let's go back to the 4 hour, right? Okay. So first thing we want to look at is we've got a 4 hour close above this zone, right? That's the most important thing. 1 hour time frame, you're going to notice here that price is indeed moving up. Okay. These two big sell-offs, these have come during the New York session, and again New York session, and I think this has got a lot to do with news. Okay, you can see that obviously the start of New York is buying in, and again here New York's buying in, and they're selling everything off. Okay, so this news related, but what you'll notice, we've got a low here, and then we've actually got a higher high. You have to ignore what's going on here for a second, right? We've got a higher high, higher low, higher high, higher low. Okay, so in terms of price action on a 1 hour, what are you going to be looking for? What comes next after a high low? Well, it's going to be a high high, right? Okay, so if you cast your mind back to the wick theory, okay, and the way that we're entering these trades moving forward is, if if we're coming down, okay, and you follow the wicks, let's just move this out of the way a second. All right, so you follow the wicks down, okay, and then we've got what? We've got a reversal pattern. So our reversal pattern is obviously evident here, which is like a breakout, a retest, and we've got 1, 2, 3 bullish candles on the 1 hour. Okay, this wick is New York Open, so they've come down, taken some liquidity from, here's an 8 o'clock candle. Okay, so taking London liquidity, because London are trying to push the price up, just don't have enough volume. Comes back down, takes the liquidity, and then when it passes this wick, it explodes, right? So how do we enter? Okay, well, you can either do this on the 1 hour, or we can go down to the 30-minute time frame, which to me is a preference when it comes to trading gold. And what we do is we just wait, because we're expecting a higher high. So we're anticipating the move, okay? What you need with gold is you need to have a target, right? Because if gold hasn't got a target, there's nothing for it to move to. It ends up very choppy. When it ranges, it's a pain in the ass. We don't want to be involved with that, right? But what we've got here, okay, we've clearly got this target area, okay? Because anyone who's long here, and when I say when anyone's long, I'm generally referring to the banks, okay? Because the banks would have been involved here, and when price does this for no apparent reason, maybe news, whatever, okay, the banks need to rebalance their accounts, and they need price to come back up here so they can get out of the trade, okay, because they don't want to sell at a loss, okay. If they've started buying and the price has moved up here, and now they're in negative equity, they want the price to come back up so they can close their trades or continue to hold if indeed it's going to keep going up. But they want to balance their books, right? So that's a very important thing to remember. Now, in terms of, I think the price action on this is going to be a little bit better to view on the 1 hour, right? Because it doesn't matter which time frame you do this on, 1 hour, 30-minute, 4 hour. Okay, I'll show you the example on the 1 hour first. Okay, so again, price is moving higher. Okay, and if it helps you, you can draw your trend line. Okay, because visual aids, I wouldn't trade a trend line, but a visual aid sometimes can just give you that extra bit of confidence, right? So we've got our target area. I'd probably say move that up to here. Okay, so we've got this rejection point. We've got the idea in our mind that the banks want to rebalance their book, and this is something where liquidity is going to be held, right? Because anyone who is short from here, when price comes up here, then they're going to be underwater, right? If we look at it on the 4 hour, we're aiming for a wick fill. Okay, so back to the 1 hour, and you got to wait for the wick to form. Okay, always wait for the wick to form. We're looking at price to form a new high. Okay, so we're coming past these highs here. The lower down the time frame, the better. So have a look at the 15-minute. Yep, we're coming up. You could potentially just buy on this candle, I suppose, but we're trying to catch the breakout, right? And we don't want any drawdown, because gold in drawdown is not very nice, let me tell you. So we put a limit order here. Okay, we're like a few pips above the wick. So this is 2039.80. So let's just go to, let's say 2040.20. Right, let's just put a limit order here. All right, now what you want to do is you want to cover the wick. So this, as we've already spoke about, this is price coming down, wicking out, just taking a little bit of liquidity from anyone who started or opened long positions, retail traders, right? Retail traders who open their short positions, they're hoping for gold to break out, and they're now getting break even or stop loss wherever they get. Okay, right, so they've come down, taken that, closed. Again, they've closed above this area. So okay, we've got closure on the 4 hour. We're still continuing to close above, and when the volume comes in to the market, gold will move. Okay, it can happen. I've seen, so with gold it can be let's say 130, and then from 2 to 3 o'clock tends to be the highest periods of volume, okay? Because you've got the New York Stock Exchange that opens, I think it's around about 2:30 UK time, right? So when that opens, there's a huge amount of volume that comes in, especially to gold. And what we're going to do is we want to place a stop order just above the price here. So if you remember when we create high highs, high lows, okay, we're obviously anticipating that price is going to move forward and it's going to come up, and the next area it's going to stop. There's clean traffic here. And what I mean by clean traffic, okay, we're looking to fill, you know, if you want to call it imbalance or any of that ICT crap, then whatever. But we're trying to, we've got no support here, no resistance, nothing at all until we hit this area here, right? So we've got our target, right? So we've got our target. Now we want 2R, okay? So as long as we're below this wick here, you don't have to aim for 2R, okay? We could have gone, you know, in this instance, we could aim, you know, a lot higher. We can aim higher purely because the next area of resistance is up here, okay? And again, we're trying to trade into this clean traffic, okay? If you're looking at wick fills as, you know, a magnet, well, we've also got this area, which has got, there's no support here, right? There's no downwards or upwards facing candle anywhere here. So I had a conversation with Christian not so long ago, and we were talking about gold. We were buying gold during the war that was announced, and gold started buying just every single minute of every day. It was pulling back, buying, pulling back, buying. I said, look, if you're going to buy gold, what's stopping it? Nothing. There's nothing that's stopping it. If it's moving and it's in a momentum, just you can get in, right? Wait for this and then do this, and he made some good money, right? So in terms of targets, we've got two. 1, 2, all right? So even if you wanted to have your stop loss lower, okay, we could have had our stop loss below. Let's have a look here. Yeah, we could have had our stop loss below the low of the day here, 700, 800 pips, which I think for gold is a big stop loss. We could have had our stop loss down here and enter on the break of this high. Okay, we're clearly breaking these highs here, right? We're breaking this high, this high, this high, this high, this high. Price is going to move up. Target number 1, target number 2, with a stop loss here. Great. If you want to go a bit tighter, I'd go under the New York low, okay? Because New York generally don't come back and take their own stop loss, okay? You got 3R, or potentially you've got 2R here, so 800 would be, would just come a bit tighter, right? You got your 2R here, and that's how you catch gold breakouts without any drawdown. Usually, don't very often when I trade gold, I very rarely go in a drawdown because of this method. I'm looking for the build up, looking for the targets, looking for a breakout of a key level on a higher time frame, and then filter down to the 1 hour and 30 minute. You have to have the confidence, okay? And you maybe want to paper trade it for the first few trades, but during the course of the next couple of weeks, I'll be trading gold in this way, and I will be recording some content and some replays that you can look through, because the more times you see it, like anything, the more times you see it, the better you get at it, the more it sinks in. And yeah, I hope you like this video, guys. If you have any questions, just hit me up in the chat rooms as usual, send a DM. Happy trading.